Is XRP Ripple a good investment in 2021? XRP, also known as Ripple, its parent company, may not be close as common to the average citizen compared to Bitcoin, but by market cap it is currently the third largest cryptocurrency. So, for one cause or another, with a lot of interest in XRP and its growing use in banking systems, is this really a good investment? First of all, let's take a quick look at the XRP. And if you stay till the end of this video, we'll show you our number one recommendation for making money with crypto step by step. Now let's jump right in. What is XRP? As with Ether and its parent company Ethereum, his fellow altcoin, many people get the name of the currency mixed with its parent network. In the case of XRP, Ripple, an open source protocol, is their network developed by Ripple Labs, more commonly also known as just Ripple. While XRP can now be spent worldwide in over 180 nations, this is not why it was developed. The primary reason XRP was developed is for it to be used as a token via the Ripple network to enable cross-border currency transfers. So is XRP a good investment? Because of the huge potential that it has to expand, XRP is a good investment. Its low price makes it a great opportunity for investment, and its use as a token for ultra-quick currency transactions with ultra-low fees through the Ripple network has seen its use grow among multinational banks. Although XRP is a good investment overall, it might not be acceptable for everybody to invest in. Any investor who really needs to weigh up the pros and cons for themselves. Let's begin by looking at how it works with XRP. How does XRP work? With existing transaction settlement mechanisms such as SWIFT and PayPal usually using US dollars as a common currency for conversion, resulting in cash and time, XRP's mission is to serve as a mediator that settlements almost immediately and at a fraction of the cost. It does this through RippleNet, an XRP liquidity solution built to make these long and costly transactions a thing of the past. XRP functions on the network as a token of currency. As Ripple put it themselves, international payments, especially in emerging markets, require businesses to hold pre-funded accounts in destination currencies. It's a costly endeavor that ties up resources. RippleNet provides an alternative. While any financial institution on the network enjoys reliable, instant and lower-cost transactions, those who use the digital asset XRP to source liquidity can do so in seconds, freeing up capital and guaranteeing the most competitive rates available today. Let's use an example to see how it does so. In the US, Tom wants to give Rachel $1,000 to the UK. This would have traditionally included going to the bank and filling out different forms. It would have taken up to 3 days for the transfer to go through after having done that and cost up to about $10 to $20. This is due to the cost of liquidity for the financial institutions that administer the trade. In order to exchange the currency, in Tom and Rachel's case, from USD to GBP, pre-funded Nostro accounts will be required on either side of the transaction. Keeping those accounts would require the bank's liquidity costs, which would inevitably be passed on to poor Tom. If this payment was made on the Ripple network using XRP, however, the result would be slightly more beneficial for Tom. It will take away the need for Nostro accounts that are pre-funded. Instead, at a fraction of the time and expense, the bank could convert USD to XRP, then XRP to GBP. Rather than taking up to 3 days and $20 for delivery, it would take just about 10 seconds and cost a nominal fee on the Ripple network. The cost would be less than 1 cent on the Ripple network, but the bank may set a fee for itself, but it will still be nowhere near the fee of a traditional bank transfer. How is XRP different from other cryptocurrencies? Several variables make XRP distinct, and somewhat special, from other cryptocurrencies. 1. No blockchain. XRP doesn't run on a blockchain, unlike Bitcoin and other cryptocurrencies. Instead, Ripple utilizes its own code, the Ripple Protocol Consensus Algorithm, to validate network transactions, RPCA. However, it functions similar to a blockchain, in that there needs to be a consensus on the network to validate transactions. It does so through a protocol of consensus. 2. Centralized. It's centralized, related to the fact that XRP doesn't run on a blockchain. For example, with Bitcoin, its entire initial intent is to circumvent the intervention of third parties. However, XRP is solely owned by its parent company, Ripple. Its utilities, something unprecedented with Bitcoin, are sold to banks. 3. Not mined. XRP is also not mined, unlike Bitcoin and other cryptocurrencies. Although the currency also has a finite supply, XRP is not produced by the actions of miners. Instead, it is provided by its Ripple parent company. There were 100 billion coins produced when the currency was introduced in 2013. To date, however, less than half of that volume is actually in circulation. Coins are released from escrow by Ripple regularly. XRP price history. XRP has seen some wild price swings in its history since launching in 2013. Its price had only managed to hit above 1 cent before 2017. But that year, in March and April, its prices started to shoot up dramatically. It was up to 5 cents by the end of April. And it didn't stop, not by a long shot there. It was up to 25 cents by the end of May. Throughout the coming months, it retraced slightly, but then rocketed in price as 2017 closed and 2018 dawned, much as other cryptocurrencies did at this point in the notorious crypto bull run, most notably Bitcoin, which peaked at nearly $20,000. On January 4, 2018, its price peaked at $3.84. But it had lost more than half its value within 2 weeks. It was around the 30 cents mark by early 2019, and to date it hasn't risen above the 50 cents mark again. Predictions differ among analysts in terms of where the XRP price will go in the future. Some have said that its price could be as high as $200 to $300 by 2030, if XRP continues on its path to wider acceptance. Other forecasts ranged from $20, $17, and beyond $5, to name just a handful. Of course, no one has a crystal ball, and several variables are involved in influencing the price of XRP in the future. Factors affecting XRP's price. Any link between the price of XRP and other cryptocurrencies has been pointed out by industry analysts. In February 2020, TradingView's Piers Crosby told the Cointelegraph that because Bitcoin has such supremacy over the crypto industry, such a connection was inevitable. Everything correlates to Bitcoin, much like in the US equity market, everything correlates to the US dollar. As they cannot be forecast, certain variables are outside the reach of the markets. During the advent of the COVID-19 pandemic, when stocks collapsed in March 2020, so did the prices of several cryptocurrencies, including Bitcoin and XRP. The price of XRP plummeted to about 15 cents, but after that, prices recovered. Its recovery, however, was nowhere as marked as Bitcoin's. There are other factors that can also affect XRP's price, which we'll look at in the next section: the pros and cons of investing in XRP. The pros of investing in XRP. Its technology enables financial transactions less than 1 cent that are almost instantaneous and negligibly inexpensive. It also has immense scalability, allowing 1,500 transactions a second to be processed, over 1,000 times faster than Bitcoin. To prove this, TechCrunch creator Michael Arrington officially sent $50 million in XRP in October 2018, and it took like 2 seconds and cost 30 cents. For these purposes, a strategic agreement was signed between Ripple and the global money transfer giant MoneyGram, notably in June 2019, with the backing of several international banks and financial institutions, such as JP Morgan, Santander, and Bank of America. Such agreements will certainly be viewed by prospective investors as locations where XRP is heading. Also, you're not just investing in the currency when you invest in XRP. You're investing in an enterprise. Ripple is a corporation with over 500 employees, ranging from those who promote the marketing currency to those who focus on items on the technology side. If the business keeps rising and does well, then the currency will certainly follow suit. The cons of investing in XRP. For any of the aforementioned reasons, a lot of the beef that people in the crypto community have with XRP is seen by some as a centralized banker's currency. It has been claimed that the very fact that Ripple cooperates with financial institutions runs counter to the reason why Satoshi Nakamoto first developed Bitcoin, a decentralized currency free from bank control. The fact that it can't be mined like Bitcoin and many other cryptocurrencies is another criticism it has received. The benefit of getting a cryptocurrency focused on mining is that market dynamics will at least partially help decide how much effort is made to build fresh blocks on the blockchain, which will affect the price in turn. If a cryptocurrency's price is poor, less mining normally takes place, since doing so is not cost-effective, and vice versa when the opposite scenario is the case. Although there are accusations that Ripple could have some sort of malicious intention by holding these coins, the company has insisted they have justifiable reasons for this. They release a certain amount of coins every month from the ledger escrows, up to a maximum of 1 billion. In fact, however, considerably less than that is released, with the unused sum being rolled over to the next month. This is done, it is said, because the supply of XRP does not have a sudden rocket, and the price does not crash. As investors are less likely to see themselves liquidated because of a sudden market change, this can certainly be viewed as a plus. Ripple unveiled its decentralization plan in May 2017 in response to centralization issues, with the goal of making Ripple's XRP ledger more decentralized than Bitcoin. What was noticed at the time was the possible weakness of Bitcoin, which is 51% owned by only 5 mining pools at the time of writing. This means a 51% attack could be accomplished by the largest 5 pools working together. In October 2017, an update was released by Ripple, which stated, "Ripple remains committed to decentralizing the XRP ledger and divesting itself of operational control." This multi-phase approach does that, but is intentionally conservative and has been devised with a single goal in mind: to ensure the reliability and stability of the network during the transition period to a fully decentralized and distributed architecture. Ripple itself has since re-emphasized XRP's decentralized existence, saying, "The XRP ledger is based on an inherently decentralized, democratic consensus mechanism, which no one party can control." The bottom line: if you're ready to play a long game, then XRP may well be a worthy investment. It is still inexpensive, too, so great for first-time buyers. It definitely looks like a promising future for the cryptocurrency might be on the horizon, with financial institutions requiring more and more liquidity to complete financial transactions, and XRP could continue to provide some of the solutions to the issues associated with that, as discussed in the article. Interestingly, at the 2019 Future of FinTech conference in New York, Ripple CTO David Schwartz said that financial institutions are extremely conservative and slow-moving, which may go some way to understand that while there has been a great deal of interest in XRP, actual adoption has been a slow process, and the price has remained very static for some time as such. During the notorious crypto bull run in 2017, however, its price increased in value dramatically, over 35,000%. If the currency continues to gain momentum, its mainstream acceptance becomes more widespread, and trust in the currency continues to rise, there is no reason to believe that XRP investors should not once again be bullish. It can certainly be a worthy addition to your portfolio of investments. The Ripple lawsuit. A complaint against Ripple Inc. and two of its main owners, co-founder Christian Larson and current CEO Bradley Garlinghouse, was brought by the Securities and Exchanges Commission (SEC) on December 22, 2020. The lawsuit focuses on claims that Ripple raised over $1.3 billion in an unregistered, ongoing sale of digital asset securities. There has been a great deal of debate about the lawsuit, focusing on the issue of whether or not XRP is a defense, or just a cryptocurrency. As the SEC argues, if it is a defense, then it must be registered with them as one. The top two cryptocurrencies, Bitcoin and Ethereum, have never been listed by the SEC as shares, but are decentralized and not controlled by one individual. This is not the situation for XRP. Ripple came out with an assault on the accusations. In a highly unusual move, the company revealed that on December 21, the day before the SEC launch, they were to be sued. The company said in a statement challenging the allegations, "We have developed products for 8 years that help hundreds of customers solve pain points around global payments. We will defend our company and look forwards to addressing this matter in court to eventually get clarification for the US crypto industry." In the US crypto industry, this lack of transparency, Ripple contends, compares with other countries such as the UK and Germany, and this holds back the growth of crypto in the home country of the company. As a result of the claims in the case, the XRP price tanked. It had fallen to 19 cents by December 30 after being around the 55 cents mark before the litigation announcement. There is likely to be no resolution soon about the fallout and controversy over the case. But it does conclude, however, that the ultimate fate of XRP, and quite probably the crypto industry as a whole, is likely to have major repercussions. On Bybit, with up to 100x leverage, you can swap XRP USD perpetual contracts. Thanks to our ultra-fast matching engine, you never have to worry about excess loads while trading. This content should not be seen as trading and financial advice, it is merely an opinion. Trading is done at your own risk. Thanks for watching. Don't forget to like and subscribe, and be sure to check out our #1 recommendation for making money with cryptocurrencies down in the description. See you in the next video.